Good morning, all. CamelbackTrading.org coming to you this Monday morning, August 22nd. We are looking at our charts here first and foremost because I think it's important, even though we're day traders, to figure out where we are right now in the bigger picture. So let's start with the monthly in the SPY and the ES. So we've been saying for a while now that acceptance above May's high would be critical for this market getting legs to the upside. They did a pretty good job coming out of the inside month. Took out July's high, took out June's high, but May's high has been an absolute failure as we couldn't get acceptance above that, which also basically correlates with the 200-day moving averages. We said if they can't get above it, this market's going to roll. Well, we're going to see if that happens. The monthly, though, is still up. The weekly, what was the weekly trying to do the last 5 weeks? We said the market was trying to go up, and it did a pretty good job of it. But look at where they hit their head on this trend line from the all-time high, basically. We are now coming into, unless something dramatically changes in the next 90 minutes, into a 3-week balance. Is that the end of the world for buyers? No. But for sure, 3-4 days ago, we had all these time frames up. Now we're going to have the monthly up, weekly balance, and the daily down. Also, this is going to be a weekly gap to the downside. And right now, it's a pretty sizable one. We're going to be having a sizable gap today, trading into a sizable gap from back on August 10th. So a lot happening here in the last 2 weeks. Okay? Now, let's go to the daily. Right? We said before anything could change, the daily has to change. Markets don't go bull bear, so we kept going bull balance, came out of an inside day, bear on Friday. We are now continuing bear. We below this trend line 3 days in a row. Now we're looking to gap open to the downside, right? Friday's low in SPY is 421.22, so it's just under a $4 gap right now. This gap from back on August 10th is also rather large. It gets filled at 412.75. It starts at 416.72. So again, $4 gap versus $4 gap. Which one's going to get filled first? I don't think either will get filled rather easily the first time into it. But now, since it looks like the buyers had many opportunities to try to get acceptance over May's high, I wouldn't be surprised if we fill this gap down here first. But it remains to be seen. The next thing also, since we failed at the 200, is are we going to go test the 20-day moving average? Right now in SPY, before the open, it's at 414.66. So we're still about $3 above it. Again, these are all things to see. We have not had a 100 million share trading day since the end of June. So it's another thing to keep an eye on. Will there be some acceleration and tempo and volume to the downside? And maybe we get a 100 million share day. Right now, pre-market, we're at 400,000. Nothing great. So now, that's what's looking in the bigger picture as what we're seeing. Now, as day traders, what are we looking at? So here's the profile. Here's Friday's action. Here's the gaps. Again, I'm in bigger increments to get all of these into the picture, but we were pretty wide up here around the 1375 level in the ES. Right now, the overnight high in SPY is 422.31. The overnight low is 416.17. We had a 9-wide POC in SPY at 418.77. That does not just go away. It will be an upside destination. So if we open below it inside this gap, that might be a level if it was to pop up to take a small short play against, see if there's a speed bump at some point. Then you have the gap. It starts at 416.72. And it gets filled at 412.75. Below that, there's nothing into 411.34, 12 wide from August 9th, and 410.22. Weak low, poor low. For the ES, their 9-wide POC from the 10th was 99.25. So again, that will be an upside destination. Then their gap starts at 41.78.50, gets filled at 38.75. Below that, their 12-wide POC from August 9th is 24.25. The yearly POC right now is at 22.50. Okay? So, again, remains to be seen if we get down to these levels, and then they have a weekly low of 41.13, which is also a poor low. So the game plan for this morning, so right off the bat, we have a weekly gap. It's sizable. Gap rules don't apply to me when they get that big, right? The overnight's going to be short. I would look for, so there's a couple things I'm looking for. We're gapping lower into another large gap. All right, it's like two weather fronts hitting each other, cold front and a warm front. Something's going to give at some point, but the question is who gives first? How much do they take back? Maybe we get an inventory adjustment. Like I said, if we are to push up, I will be looking for shorts. Right on our checklist, sellers will certainly have value and a gap to start off with. Okay? That's for sure. You have a double distribution day right now on the overnight. So if we are to push up, I will be looking for shorts in the ES, whether it's against that first 9-wide POC at 99.25, whether we do get up to somewhere around this wide POC overnight. But I will be looking for shorts, or even half, depending on where half back is in the overnight. So that's all remains to be seen. You'll be getting all this in our trading room if you're with us live. As far as a long, possibly somewhere inside this gap from the downside from August 10th, maybe the first time I look to take a long. Where would that be? Possibly against the 20-day moving average, which is going to be inside that gap. Again, it's a fluid situation, so it's all going to depend. I wouldn't be taking it long because I think the market's okay. I'd be taking it because A, I think it might be stretched out. B, it's still short-term traders most likely, at least to start with, we're playing against. So they might stop at visual levels such as the 20-day moving average plus inside of a large gap. All these things will be taken into context when the market opens. Thanks for the likes and subscribing. Good luck trading today, and we'll recap at 4 p.m.